Okay, so we're going to be doing a market scan, and we're going to be, let me see. You can see my screen, right?
Yeah.
Oh, go perfect. So we're going to do a market scan. So I'm going to go through all the securities that we have here and look for opportunities. Some of them I will skip them because the CFD is not available. The broker doesn't allow. Excuse me, it doesn't allow a CFD on that security. For example, Accelerant, they don't. The broker doesn't have a CFD on it.
Okay.
So I started kicking out of with APSA. So APSA was waiting for that 182 resistance. As you can see, it bounced off it for quite a while, and unsurprisingly, when it came to it, it just bounced right off. So I'm expecting it to come back around 50 exponential moving average before it bounces back to 182. So for now, I'm just going to be ignoring APSA. So I move on. African Bank, good. So
Mm-hmm.
now there was this support line that was there as you can see the market came back to bounce on that line quite frequently, and we broke that line today, and we have a golden cross. So I will lower my stop just a little bit to give it a bit of room because the first rally from a golden cross usually doesn't hold. So I want when that pullback happens, instead of taking me out, I wanted to provide me with an opportunity to raise my stop loss and add to my position, hopefully.
Cool, cool.
So I've spotted an opportunity. I have a buy at so taking in yesterday's close as a buy, okay. First, what I do is I will grab a screen. I'll take a screen grab.
Mm-hmm.
Right, take a screenshot and go dump it on. Damn it. Okay, what date is it today? 23. Right. So I take a screenshot. I go dump it here. So what normally I would have like some annotation that the stock broke stock broke a resistance level, blah blah blah. I'm gonna build up a 1% position, blah blah blah. Um, this here I don't have, but okay, let me just make an example with something here. Would be something like this, right? Some annotations on the chart. Normally I would do that, but because if I do that with every opportunity that we find, we're gonna just quickly run out of time. Right? So I'm just
Okay.
going to drop the chart. I'll come back to that annotation a bit later. Then I go to my Excel journal to calculate my position. So, but my assumed entry is last night's close, so which was at 220.
Mm-hmm.
Sometimes I take this price. Yeah, this is the bid. So this green price was the closing bid,
Okay.
right? If it's higher than the actual price, I typically just take this price as my assumed entry price because there's to account for slippage. I do my best to account for slippage. It's not enough. This is not nearly enough to account for slippage, but it does work,
Yeah.
right? So 261, 261. Okay, let me. Okay, that's fine. 261, and my stop loss is at 224.65, which means I buy myself 2.4 shares. Let's look at how that looks like in the. Oh, sorry, my bad. The first thing I do is just that I did it yesterday. First thing I do is I go through the history. So yesterday, firstly, I look at this number here. So if it's one, if it's less than, I know that I've been stopped out at some position, and if I'm not
Mm-hmm.
sure, I go check anyway. If today I sought these by closing price, by closing time rather. So yesterday I had a stop. I got stopped out, and they did update the journal stuff, right? So what I then do is take
Yeah.
this price here, I mean this amount here, which is 8,000. Well, I didn't update it. So update that to 8,522, right?
Okay.
35 cents. And then our equity is 22,126.57, right? So that
Mm-hmm.
I make sure that when I calculate my risk size or my risk position, I'm using the current balance, not one I stored days ago while I got stopped out a few times or got hit in swaps. And now I'm taking a bigger position than I actually should because the
Okay. Cool.
balance
Cool.
on the journal is higher. So the first thing I do is update my balance, right? So
Mm-hmm.
this is my I updated the balance to 5,235, and the equity to that. Now I know that from my starting point, I'm down 17% if you look at my balance, but when you look at my equity, from my starting point, I'm up 114%, right?
Yeah.
Which makes me comfortable. And when I look at my P&L from my current balance, instead of looking from where I started, I'm looking at where I am. I'm up 100
Mm-hmm.
and just under 160%. And then I know that my gearing based on capital invested, it's 8.35 times. But the important gearing level is based on the balance, which is 10 times. So what gearing is the ratio of leverage that you have exposure to,
Okay.
right?
And then
Yeah.
this is set on the whole account.
Yeah. This is on the whole account. So
Okay.
on the thing I have is total exposure here. So this entire so when I buy 176 shares at
Mm-hmm.
125 for MTN, my risk is whatever it is that I've set out to be with my stop loss, but my exposure, even though I didn't take out that money, remember when we're using CFDs, we're using borrowed money. My exposure, so
Yeah.
if this thing goes down to zero overnight, I owe 22,000,
Okay.
right? But hopefully it won't go overnight, man. It's MTN. um, and if everything I've bought goes down to zero, my exposure, my risk, my full risk is 86,000. I only put down 10.
Mm-hmm.
If this whole shit goes to zero, if everything goes to zero,
Mm-hmm.
I'm down 86,000 rand, right? Hopefully it won't. It won't go because this could only happen if it goes straight to zero from what it is right now.
Yeah. But wait, doesn't think trader have margin calls?
Yeah, they do. They do. My broker won't allow
Oh,
me.
okay.
Yeah, they won't allow me to.
To go negative.
Yeah, so there's checks and balances before I came in. So the broker won't
Oh, okay.
allow you to owe them money. That's not what they. That's not the business they're in. They're in the
Okay.
business of making money from you, not you owing money to them.
Okay. But basically, you have 86 that you've borrowed from them.
Yeah, pretty much, essentially. Yeah, yeah,
Okay.
yeah.
Which
Then
is
I
10
make
times
and my
your
profit. My
your capital.
profit is based on that 86,000. That's the fun part of the gearing factor.
Yeah, yeah, yeah.
You know, my profit
So why
based
10 and
on the
not?
86,000. So if this portfolio goes up 1%, I'm up 10
Hmm.
because I'm geared
Yeah,
10
yeah,
times.
yeah.
Yeah. Sorry, continue. What you were asking?
I was gonna ask. why 10 and not 50 or 100 or whatever?
Because gearing is a two-edged sword, right? It cuts both
Mhm.
ways. It,
Yeah,
it,
yeah,
it, it
okay.
it really does. It cuts both ways. You take a position too big. Remember what happened yesterday? That
Yeah, yeah,
string
yeah.
of losing trades. Let
Hmm.
me go back to my closed position. So you gear yourself 10 times by taking big positions, and then this happens.
Okay, okay,
You
okay.
see the frequency on wins and losses.
Yeah.
Man, you thought seven was a losing streak. Man, I have a losing streak. I'm the king of losing streaks.
Yeah, 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 yeah.
Man, let's see. This is
Really.
this is 14 in a row,
Yeah,
right? And if you're gonna gear yourself 10 times, which means look at that, look at that. So you're saying gearing Y10, not 50, which means every position here is 5 times as big, right? So instead
mm,
of 1%, I'm losing 5 here. So imagine a, a, a loss 5 times as big in a run like that. A loss 5 times as big
yeah,
in a run like that is taking you to the cleaners.
yeah. Okay,
I'll be in
okay.
a drawdown so deep it's hard to get out of. It'll take me forever to get out.
Yeah, no, I feel you.
I
I
can't.
feel
I
you.
get. It's getting to. It got to that gearing level because I'm holding a big winner.
Oh, okay, okay.
So the only reason why we're even hitting 10, even 10 is a stretch, bro. Only why we're
Mm,
hitting 10 is because we're sitting well in profit, right? You know, all
okay,
things being
okay.
equal, if all my stop loss are hit, I'm up 65%.
Yeah.
If all these stops are hit, let's say the market opens tomorrow, everything
Hmm.
goes down. My stops are hit. I'm up 65% instead of being the current profit at 174%. So the risk of holding this 174% for me is 65%. There's a profit of 55%. So what I'm risking, remember, I don't have a take profit target. So what I'm risking
Mm,
is being up 65% for potential
yeah.
reward on an upside that I can't compute because I don't know where. There's no limit to the upside. I don't know where the upside is,
Mm, mm.
right? So that's worth keeping in mind. Moving right. Okay, so we were here actually. So I said it was 261. I think it was 0.37. 0.37. Let's get that right. Stop loss there. That's the risk we're taking. So that's the difference between our entry and stop.
Mhm.
My risk to take, right? Maximum risk I can lose on this trade is 85 Rand 22 cents, which is 1%
Okay.
of my account balance, right? So in order for me to
Awesome.
lose 85 Rand on this trade, I'm buying myself 2 shares because why? I'm going to take the amount that I'm willing to lose on this trade divided by risk per share, which is entry
Okay.
minus stop, the difference between your entry and stop, right? Gives me
Okay.
the number of shares that I should be buying. So I'm going to be buying okay, let's use that, right? So I'm going to be buying African Rainbow, 2.3 shares, stop loss at 22465. So now I know when the market opens at 10 past 9, okay, this is supposed to be buying. And today's date, which is the 23rd,
Hmm.
right? So now I know when the market opens at 10 past 9, I'm just pulling the trigger. I'm not planning anything. I'm just pulling the trigger and going back to work.
Okay, cool. And this is gonna be, is it 2.3 times 10?
No, it's just going to be 2.3 shares.
Okay.
Yeah, so that gearing level we're looking at is on the overall portfolio when putting everything together.
Oh,
How badly are we exposed?
not per instrument.
Yeah, not per instrument. Yeah. So this
Okay.
gearing levels is the overall portfolio. So when I look at this, if it starts to approach anything closer to 20, I start getting worried. Start putting brakes on putting the trigger.
Okay, cool.
Yeah. So let's move right along. Wait a minute. Okay, cool. Yeah. Platinum looking very good. Broke out a resistance as well. So initially I was going to raise my stop to 1855, right? But that's right in front of that 50-day exponential moving average, and I'm not 100% sure if that will be enough to protect me, right? That trend line, excuse me, that trend line there will be enough to protect me. So instead, I'm gonna go to the low that is closest to the 50-day exponential moving average and place my stop there for now, and then watch what happens. And if I get a second bite, and then I can take it and add to the position. We'll get to the second bite in a moment. So I raise my stop loss to there, which is 1839 cents on MPLAT. So I come here to the
Mm-hmm.
journal. I look for MPLAT. The share code is AMS, and I update my stop loss to 1839 cents. Again, I would
Okay.
then I do this. So I take two screenshots when I update the stop loss. So I have my Anglo American, right? And then we come to this guy here. Come to implant, right?
Mm-hmm.
Take a screen grab, drop it in, take the date, 23 Feb. Right? And I also drop a screenshot of how we're looking like at the moment. Right? So I can take it. Let me take it over here. I usually have the this screen on the laptop, so it's a smaller screen. Doesn't give me this much data. Let me drop it in anyways. So okay. Now I know since I've updated my stop loss, my risk is reduced to 0.66. I'll annotate this chart as well and say, let me just right? I'd annotate says, okay, we broke a resistance at 1954, and then I raised my stop loss to just below the 50-day exponential moving average to 1839, and now reducing my risks to 0.66%. And then, just taking note that the exposure is still 1,800, and the weighting on the portfolio is 2%. I'm good. Move right along. I don't need to put that on the shopping list because it's just a stop loss update.
Mm-hmm.
AB and Bev, not looking very good. Nothing good happens on the 200-day exponential moving average, so I move right along. So I'm going to skip Excelomet because the CFD is not available. It's too small a share, I think.
Oh, is it? Okay.
Yeah, and, liquidity issues. So Aspen, I have an interesting one in Aspen. So I've been bitten quite a lot on calling a bottom on Aspen. So what I'm
Mm-hmm.
going to do instead is, so we have a nice bullish engulfing candle, which ordinarily I'll just wait for a close higher and then buy the stock. So instead, I'm just going to wait for it to come back above that 50-day exponential moving average. So if it
Okay.
comes back above the, just in case it stays on how it stays hugging the 200-day for a long time. So I don't pay swaps, right? For
Okay,
something like
cool.
for deadwood, I don't pay cost for a deadwood stock, right? So I'm gonna wait
Mm-hmm.
for it to come back above the 50-day exponential moving average. Maybe a false breakout, You never know. But I'm going to wait for it to come back above that 50-day exponential moving average. So moving right along. This is where I got stopped. This is the thing that we were looking at earlier. It was just a false breakout, man. Nothing more to
Oh, okay.
say. Golden cross, death cross. So the opposite of the golden cross is called a death cross. So this is a golden cross, 50
Mhm.
coming to above the 200-day. And when the inverse is called a death cross, because when that happens, man, things usually don't go too well,
Mhm.
right? So we move right along, looking at Anglo. Gold is looking quite bullish at the moment. So I'm waiting for a new high close at 352. So if you can close through 352, I'll raise my stop loss and perhaps add to the position. But for now, um, I'm holding on any part of the execution. So
Right.
this looks like a fill head and shoulders that was building that is failing. I might get stopped on this trade. Perhaps I should have gotten tighter with the stop, but I'm not. Even when I actually think that, I'm not gonna at the open preempt the trade and exit the position. I'm gonna wait for the stop till they hit,
Mhm.
right? And the reason for that, I know I'm a disciplined trader, right? To only cut position where I feel a degree of certainty that my stop is going to be hit because of experience. I've been watching this chart for some time, right? But what I'm
Okay.
protecting myself against is an inflated ego,
Okay.
right? Where now I'm going to color my logic saying, I know what the market is going to do, and this has failed, even when it is only moderately failed. So instead of adding too much discretion to the process, I just let the mechanics be the mechanics.
Mhm.
Yeah, so I don't preempt anything, right? So moving right
Okay.
along on bet, if you zoom back out, that level man has been a monster. That's 709 has been a monster. Came back to it. Look how hard this thing was running when it came to that thing. It just stopped. Like markets of memory, man. And I'm sure if you drop this here and you zoom out, let's maybe jump to a weekly chart. There was some respect to that level. Markets always have memory,
Mhm.
right? So they remember where they stop, right? They remember where they stop, and I think this week could be the first red candle since the breakout. That's how
Okay.
significant
Okay.
that 709 level is. It gave us the first red week since the breakout
Yeah.
of the rally. First. So whenever if it breaks that 709, man, it's gonna be it's cricket. It's running.
Mhm.
Granted, it's not a false breakout, but if it breaks that 710 level, man, then we're good. Then I move right along, big vest. So strong breakout there. It's one I have a bit of regret in because I did spot that breakout there. I did
Mhm.
spot that breakout there, but I thought, let me wait for that one because this might be a dead wood and been stuck in this range for a long time. But I've since forgiven myself for doubting myself and pulling the trigger right at that bottom. Then of course it's filled with hindsight bias because now I know what happened.
Yeah.
Right. Anyways,
Yeah.
so whenever it breaks a resistance, particularly if it breaks it quite hard, it usually comes back to test it. And it looks like we're holding on, if you use that as our support level, it's holding that 240 as support. So now we're going to wait for it to come back to close through 220. If it comes back to close through that, now if this low doesn't get hit, right? If it doesn't get taken out,
Mhm.
now this is my new stop loss. Once we break that 220. So I'm producing my risk on this trade.
Cool.
So
Cool.
moving on. So you're following so far, you good, right?
Yeah. Yeah.
Yeah. So moving on, Bitcop. Um, looking good, battling with the 50-day exponential moving average. Let me jump into the weekly chart just to be clear on what's happening there. Perfect. Again, markets of memory, man. Markets remember. Markets remember, and then you can see here it's the old phenomena: up the stairs, down the elevator. Markets tend to go down the elevator. That's why I don't like the short. That's why I don't like the short side, man. The short side is hectic. Look at that. Look at that. Look at that. Anyways, so I'm waiting for 351. Let's go to 352 on the daily chart. We're still a fair bit of distance away from that. Nothing to worry about that. Capitec, strong results, man. Strong results. And there's an asymmetrical triangle pattern forming. Let me just quickly redraw it. Right. This is called an asymmetrical. This is called symmetrical triangle pattern. Because if you slightly cut it in half, the triangle is symmetrical, right? And how you treat this is on the fifth wave. So usually it goes on 4 waves. So this is 1, 2, 3. No, this is 1, 2, 3, 4. And then on the fifth wave, it usually breaks out. And then that extension of that run is the size of, it's the width of the triangle. So you take the width of the triangle from its broadest point, which gives us about 11%, and then you project it upwards from the breakout point.
Okay.
You get. So instead of doing that, because of my style, if I wasn't in the position, I was just going to take the trade on the symmetrical triangle breakout. But I'm going to wait for that overhead resistance to break to then raise my stop loss and add to the position, because I know above that point we're starting to run.
Okay.
Richmond, not looking very good, so moving right along. I'm waiting for it. I'm going to entertain it above that 50-day exponential moving average, so maybe above the. So for now, that's not going to happen for a while. There's a warring bearish flag, but I'm hopeful because it's a bearish flag is also an uptrend channel. So I'm going to wait for 306. If it breaks 306, after coming off that exponential moving average, I raise my stop ever so slightly, maybe below that candle there. But when it breaks 320, I'll probably be adding to the position. Coronation, not looking very good. Not looking very good. And it's a long way to the bottom. Man, that's a long way to the bottom. That is a long way down to the floor. So I think the floor is somewhere around that old resistance. If you jump back to the weekly chart, I think that's the floor at 44 Rand, and perhaps even more extreme at around 37 Rand. So I'm not touching coronation with a stick at the moment. And it's one of the trades it's one of the stocks that give me a nice profit. I think I pocketed about 10% on that rally there. Discam, not looking overly okay or overly convincing. I'm waiting for it to come back above the 50-day. Using the 35 Rand 64 as my resistance. Discovery, think it ran too far, too hard. Gonna revert to around the 50-day exponential moving average. Again, markets and memory, man. Markets and memory. Do you have any idea why markets have these memories? Like what causes markets to have this kind of memory? To remember a price of 3-4 years ago.
I know, my dad.
You don't. You know why? Because let's navigate there for a second and move back. Right? So someone bought here on this breakout. Someone bought. Right? And whoever bought there has been sitting with a loss. So whoever bought there and they haven't sold this yet, right?
Mhm.
Because they're a long-term investor and whatever, has been sitting with a loss for 100. Let's make this a weekly chart so that we can get this number better. For 172 weeks. So that's about divided by 52. That gives us 3 and a bit years, right? So they've been sitting at a loss for 3 years, right? And they
Mhm.
finally have a chance to get out of the position even. What do you think they're going to do? After being
The same.
down, after being down, um, where's the price range? After being down at the low, it was around 65% on the share price,
Mhm.
right? So when they get their first chance of breaking even,
You get out.
they get out, right? We're
Mhm.
going to see something similar around 185, right? But as soon as we break 185, right, and when we make a new high, then on the other side of the trade, now everybody is winning unless you short.
Okay.
There's no
Okay.
one sitting in a loss. That's why new high prices, new all-time highs are so significant, and they're really so much post the breakout, because
Mhm.
everybody's is in profit. No one is looking to sell, and then of course
Mhm.
you will run into the same people that stuck with the loss but didn't take the profits and wait for it to run a little bit. Now that they have a small profit, they can take it,
Okay.
and then
Okay.
we have pullbacks and the like, and then it gives us opportunity to keep on adding to the position. That's kind of how that phenomena of support and resistance is getting built.
Mhm.
And also, there's a trader that's looking at this with the same eye that I'm looking at, and they
Mhm.
come here, and they short the stock, and so they're gonna sell. Wait, so they're gonna short the stock in hopes that those stale bulls there will be enough to help their position to revert back to the mean, right?
Okay.
But
Okay.
that's not the game that I'm playing. I'm not. I don't. I'm not one to stand in front of. I'm not one to stand in front of a moving train and be
Mhm.
Hercules. So I'd rather be behind the train, not in front of it. So I think it's going
Yeah.
to revert back to 152 um, to retest that 50-day exponential moving average. So it's going to be a while till I do anything on the on Discovery. Distel, I'm no longer watching Distel anymore because they're going to get delisted very soon, which means my upside is limited. So yeah, unfortunately, I have to say goodbye to my favorite, um, to my first highlight troll trade.
Mhm.
DRD Gold not looking very good. We do have a double bottom. They posted a terrible set of numbers, interim results. So I don't. But gold is running, so hopefully maybe that will help them. But it's going to be a while till I do anything with gold. And Zara broke into a higher box, found some
Mhm.
resistance at that old high there. I suspect same phenomena. So I'm expecting the stock to come back to test the base of the triangle before it comes back to break higher. If it does that, I'll raise my stop slightly to below that 50 exponential moving average. First rent, waiting for that 65, new high close. If you can look back, it's an important level, right? Looking for the
Mhm.
new high close. I was actually waiting for that, right, until that happens, right? So if when it comes back above 65.50, raise my stop to just below the 50-day exponential moving average ever so slightly, and then I want to add to the position. For Shina Group, waiting for 141, tested it but didn't break it. We have a golden cross at the back of us. Still a relatively new position, so I'm going to be steady with the trade. The level that I'm looking at is that 163.36. For if I get to that level, I can cross that level with my position intact. That's I'm going to be happy. Ascending triangle pattern for me. When I'm on, let me just get rid of everything. Ascending triangle pattern, 50-day EMA serving as the trend line support, and is that. Right? So ascending triangle pattern, as you can see, it's rising bottom and a flat top. So it's ascending and it's a triangle, right? And that's a similar pattern. 1, 2, 3, 4. On the fifth wave, it usually breaks out. So I'm waiting for a breakout there to raise my stop loss to, instead of doing that, let's just duplicate and go back there. To around 82 and 50.
Okay.
Go fills. Looking very nicely, broke out. So I'm gonna wait for 215. I think Goldfields was I didn't get a chance to look at the results, but I think it's healthy off the banks. At least from a charting perspective, it's much healthier off the gold miners. So if that gold breakout holds, we'll get to it in the end. But if that gold breakout holds, man, we're in for a ride. Wolf Point property is not looking very good. Nothing good happens under the 200 days, so we'll move it right along. Similar story here. Implants, looking nice. Terrible set of results, but looking good. Which tells you that PGMs as a market, they're healthy. So you might want
Yeah.
to look at PS. You might want to look at Sibanye. You might want to look at African Rainbow. You might want to look at other platinum miners,
Okay.
right? Looking very nice. So I'm gonna wait for 265. I don't think we'll get it this week. Maybe next week, unless of course something surprising happens. Um, Investing looks like buyers are running out of sellers are running out of steam, man. This is looks like 50-day will hold up. So let's see what happens today. If we get a green close today, I think we good for a turn. Waiting for it to come back above 94 to raise my stop loss, probably to above that level, and then adding a massive size to the position. JSE, I don't like the JSE chart man at all. But I'm waiting for it to come back above that because I don't think it's gonna do anything special while it's still in that range. So I'm just gonna wait. Kumba, Golden Cross. So I'm just now waiting for a 685 breakout. So if we break 685, I'll start building a position here. We already built one on that breakout there on my smaller account. Liberty, when I wait for it to make a new high and then evaluate the situation. The thing with Liberty, there's that potential delisting from Standard Bank. So it's moving in sync with Standard Bank so far. So whatever when Standard Bank is running, it runs. Because I think part of the deal is you get Standard Bank shares for your Liberty shares. So
Oh,
that
okay.
correlation is unsurprising. Life of Care, waiting for 2580. So some of these charts you don't spend too much time. You just watch. The level you're watching is not hit, and you fair distance away. So 180 is a fair distance away. So I move on. Momentum Metro. I did catch that nice thing here, about 2 or 3% profit, but it's been dead wood since. I'm gonna wait for it to come back above 20. Monday, not looking too badly. Not looking too badly, but I'm gonna wait for it to come back above 4 4 to in order to start entertaining it.
Yeah.
Master Price starting to look quite nicely. I did add to the position. So my goal is to get beyond 241 with a risk-free position. So in other words, my profit should be at least 1%. At that point, I'll have a risk-free position. But if it breaks 225, I'll raise my stop slowly again. But if it breaks 241, I'll raise my stop and add. MTN looking like it's closing the gap, wanting to bounce off the 200-day exponential moving average. So there were big orders when I was looking at the order flow of the last 20 trades at the closing auction. There were big orders. I think I saw something like 500,000 shares. The thing is, what I'm not sure about is which side did those 500,000 shares hit, if it was hit on the bid or the ask, right? I suspect it was on the ask because of the candle that we got. It looks like buyers started coming swooping in on MTN, right? So what I'm waiting for on MTN is for it to turn. If it closes above 192, I raise my stop loss to below the 50-day exponential moving average, securing a fair chunk of a profit. As you can imagine, man, picked these things up a while ago. And then add to a position. I'll probably be adding another 10% risk to. So you see, now that I'm in profit, on MTN. So for example, 174. Let's say I raise my stop loss to 174, right? Which means I'll be up, let's say 100%. This is 100%, more or less, right? Because I'm up 100%, right? My risk, my profits on the trade, my locked-in profit in trade is above 80. So I put in a 10% risk. So I can put this position in size. Because what's the worst case scenario? I'm up 80% on the trade. I'll take that any day. Because what's the potential reward? Well, I don't know. I don't know how far this thing is going to run. But if it runs, and runs with me in size. So it's worth the risk.
Okay.
Which is why when I find myself in a position like this, my gearing levels will inevitably increase. But that's a byproduct of being profitable, not just of reckless trading.
Okay.
Got it. Okay, cool. Moving right along, multi-choice not looking very nicely. It's an ugly looking chart, very volatile. So I'm going to be ignoring it for now. I'm going to wait for it to come back above 140 before we can start talking with multi-choice. I don't know why banks have been taking a hit. Perhaps I don't know. I really don't know why banks are taking such a hit. But if it comes back up to the high box above 217, raise my stop loss and add to the position. I don't stress myself with the reasons why stocks do what they do. Moving right along. If I move too quickly, stop me and I'll go back. I'm moving right along. Nothing's happening there. As you can see, platinum. Watch platinum. If a platinum stock posts bad results, right? Decrease in earnings, decrease in they cut dividends. I think they cut it by 50%. Decrease in profits. Once a company posts negative results, but see a positive reaction in price, that sector as a market is healthy.
Okay.
Right? So you start to see that its siblings, who may be in better shape than them, financial better shape, will run harder than they do. So if that stock run, I'm interested in the whole basket of platinum stocks, and I don't do what portfolio managers do, trying to look for the best one. I just buy all of them, carry all of them. I'll carry, and that makes me vulnerable to a heavy correlation because it's really just one position traded 5 times. So it's not a 1% position; it's a 5% position, but it's a 5% diversified position. That's what I like because I don't know which one of these platinum stocks is going to have a smooth trend.
Yeah.
Right.
Okay,
So
cool.
anyway, moving right along. Omnia is not part of the CFD list, so Mutual breaking lower. Again, nothing good happens on the 200 day. Nothing special is happening here. I'm waiting for 23.76. Pick and Pay not looking very good. So here's another thing. So you open the Pick and Pay chart, right? You see that it has been falling, right? So what you want to do as well, look at peers. What are the peers doing, right? So you go to Spar, you look at Spar, you look at Woolies, you look at ShopRite, right? Which we'll get to those in a moment. You look at those. If all of them are falling, it means the market in that sector is, generally speaking, unhealthy, right? But if there's a runner in one of them, that means that specific runner is the best of the bunch, right? So it could be, you don't want to take these rules and just apply them blindly. You want to add a bit of discretion here and there, right? Because I think Pick and Pay did post a decent result, but ShopRite just knocked it out the park. So what I think happened then is that investors moved from Pick and Pay to ShopRite, and from
Okay.
Spar had a terrible set of results. And again, investors looking at the grocery retail market move money from Spar to ShopRite. That's just my thesis. I don't know if that's what actually happened, but that's just my. Anyways, Quantum not looking very good. Nothing good happens, man, below the 200-day exponential moving average. Just nothing good happens there. RMP, there's a battle of miners for RMP between Northern and Impala, so I don't know how that's gonna turn out. RealNet, RealNet, man, I didn't like the charts. I was gun shy to pull the trigger on this one. I kept raising my entry points because it's been in a Fed rally for a while now. I don't feel so good about it, man. I do feel with a bit of regret, but we put those behind us and move right along. So I'm gonna wait for it to come above 343 to start building a position, unless of course we have a reaction, which I'll also start to be interested in. And that's another important thing. As a trader, you need to forgive yourself. You need to. You are going to miss trades. You are going to be gun shy at times. You are going to miss trades. You're going to make mistakes. You're a human being, right? And hindsight bias will tell you you're a terrible person. Your evil Katie will tell you bad trader and whatnot and whatnot. Just forgive yourself that you're human,
Yeah.
and you caught other opportunities and you will continue to catch other opportunities. This is just one of opportunities that you didn't catch. Then you process it and you move on. You don't
Okay, cool.
begrudge yourself over a missed opportunity. That will just make the situation worse. Because what will happen is you miss an opportunity, especially the massive profit opportunity. You miss that profit opportunity. Now subconsciously you're trying to make that profit back, even though you never lost it to begin with. But you want to make that profit that you lost as an opportunity cost back
Yeah.
by putting what to a big position, right? Which is why, again, when if you come back to yesterday's lesson, I like that you start disciplined to your 5% position size strategy, um, even on a run of losing trades. So just imagine for a moment that you notice that you miss this rally, right? And you could have caught it. You could have caught it. Your rules could have caught it. That's the thing. That's what's going to eat you up. Your rules caught it,
Yeah.
right?
Okay.
Because my rules, 50 days above 200 day, we got that. We have that golden cross there. And if you're looking at that as a resistance, even if you're looking at that as a resistance, my system would have caught that breakout. Now, my system did catch the breakout. I just didn't take the trade. right? So
Okay. Okay.
you're building yourself up for missing for missing a trade opportunity, um, and then just imagine you're missing this one chance, yeah, of making a profit
Yeah.
opportunity. And let's say this thing runs to the moon, man. It's 10 bagger, and you didn't have the balls to jump back in as the trade was continuing, right? What are you going to
Mm-hmm.
do on the next trades? You're trying to make up for that loss, and then imagine if you hit with 7 in a row,
Yeah.
right? You're trying to make up the profit that you lost in this one trade by putting up a 10% position instead of 5, and then you hit with
Mm-hmm.
7 in a row. Now you're down 90%.
Okay. Cool. Cool.
You
Cool.
see? And then I think if you're down 90%, you need 800% to get back to even, something of that sort, right? So which is why
Okay.
you don't want to beat yourself up over mistakes, man. You're a person. You'll make mistakes, and carry them, move forward, and let it be. And I'm
No.
not.
No. No.
I'm also not saying be mediocre about it. I'm not saying be nonchalant, with your approach to the markets. And you say, if I miss an opportunity, I miss it. It's fine. No, no, no. That's not what I'm saying. Because that attitude will make you lose even more opportunities in the markets, which will beat yourself up even more. It's gonna create a downward spiral. It's gonna create a negative feedback loop. You know what I mean? So you don't wanna you don't wanna play smart guy with the markets, man. Anyway, moving right along, Remgro flirting with the higher box, not moving with any significance. But if it does, I'm gonna raise my stop loss and add to my position. So I'm gonna wait for it to take out that high there at 144. Let me just quickly drop a line there. I'm gonna wait for it to make a new high, but I want it to close through. I'm gonna want it to close through, not just touch it. I want it like a high close through 134, and then I'm gonna raise my stop to 134 and add to the position. Religion are not available, so I'm gonna skip right through it. Rand merchant investment holding looking very nicely, holding the support line of the uptrend. Looking like it wants to form an ascending triangle pattern now. Serving the top of the box as its top line, looking very nicely. I'm well poised for adding to this position. Sunlam, again, memory, man, memory. Anyways, so if it comes back to close through 67, I'll raise my stop loss. I won't be adding, but I will be raising my stop loss. Sometimes I just don't like this chart, man. Look at the volatility, the rates. It's just not. And also it's directionless. Oh, welcome you back in. Are you in?
Come again.
Oh, okay, cool. Where did you get disconnected from?
Uh. Oh yeah. The part about um forgiving yourself for missed trades.
Oh, okay, cool. So did you see Remgo?
Yeah. I think we were on. Might have
Ram
been on
Merchant.
Santa. Yeah. Yeah. Yeah.
Okay.
Yeah.
So
We can
here I'm
make it.
just it looks
From
like
there.
it's forming an ascending triangle pattern. I'm waiting for it to break to the high box, not in a hurry. In which point I'll add to my position. We did look at
Mm-hmm.
Sunlam, waiting for 67. Again, markets and memory, man. Markets and memory. I think it's going to
Mm-hmm.
come back to test that 50-day exponential moving average, but we shall wait and see. Sometimes I don't like how the chart looks like. Look at how dirty and volatile that chart is, man. It's
Mm-hmm.
hard to hide your stop here. Sapi had a nice strong break. They came back. So this was on quarterly earnings because
Mm-hmm.
they listed in the US. They report quarterly earnings as well. They were nice. They were nice. Market liked it. Um, So with Sapi, if you look at the weekly chart, right?
Mm-hmm.
Look at that base, man. Look at that base. If that rally, right? So now just
Mm-hmm.
coming back to retest the the top line of that of the head and shoulders pattern, the neckline. So, but look at that rally, man. Look at the clean area
Mm-hmm.
of there's no much level of resistance. There will be high highs and high lows, but that looks very clean, man. That looks very clean, and it looks like every time it bounced off there, the market
Mm-hmm.
turned. I mean, it did the same in 2008, did again in 2011, and in 2020, and then we saw it rally. So looking very good. I'm liking Sapi a lot. I'm liking Sapi a lot. It's just been hard to hide my stop loss because man, those things were deep. Because I did catch it. I did catch the first rally, but that thing was deep there. I got taken out. Now I'm just rebuilding the position.
Mm-hmm.
Sasol, I'm looking very good. I think oil prices have started to turn as well. Looking very nice. We'll look at Brent in a moment. Nice bullish flag breakout, but instead of entering in a breakout, if I didn't have a position, I'll probably be building one here because it's a nice bullish flag breakout. Accompanied with a doji from yesterday. So if it breaks through 353, I raise my stop loss to there and add to my position.
Cool.
ShopRite has been moving inversely to Pick and Pay and Spar, so strong off the bunch. And the results that they came with, man, they just knocked it out the park. ShopRite is just eating those grocery retailers for lunch. Man, they just coining it. So
Yeah.
it's worth holding ShopRite. I'm waiting for 336, and the reason for that, if you jump back to the weekly chart, that's the reason. Market respected that level quite a bit. So if you come back about 336, add to the position.
Okay.
Sibanging. Let's see. I will be buying Sibanging. Maybe let's wait for it to close through that. No, let's wait for it to close through that. So I'm gonna wait for it to close through that candle there. So I'm gonna wait one more day to build a position here on Sibanging. Standard Bank. Nice doji. I don't know if it was saved by the bell. Sellers were right.
Mm-hmm.
Sellers ran out of stock, but I'm waiting for close through once the 5 to gradually raise my stop loss to just below that 50 to exponential moving average. I'm still building my position on banks. Starting off CFD not available, so and that doesn't look good either.
Mm-hmm.
Spa, you see, same direction as Pick and Pay, while ShopRite is running. So the conviction on the ShopRite trade grows because you
Okay.
can kind of see the shift in market share.
Okay.
Telecom, nothing good happens on below the 200 days. So I'm just gonna similar story here. Transaction capital. Waiting for breakthrough. This is another one of I had that nice rally there. I think I bagged about 20% return on that rally there. It was a nice not trade. Not I got stopped on that pullback there.
Okay.
Anyways, nice to remind yourself of the ones you stack in the bottom corner or the top corner, man. It's nice goals. Anyways, I'm waiting for 46, 47. If we can break through that, raise my stop slightly, but the level I'm truly waiting for is that 50 and some change. Truth, I had a nice strong break there. I raised my stop loss. So now that it has come back to retest what was an old resistance on the other side, if these hold, I will raise my stop loss to just below that 50-day exponential moving average. So in other words, if it starts to show signs of turning, I will raise my stop loss.
Cool.
Vodacom looks like it's having a tough time with that 150 level. I do not
Mm-hmm.
know how bad a hit that please call me will have them because 5% seems like a lot. 5% seems like a lot of money. But we'll
Yeah.
see how that unfolds. Um, yeah, but for now, just keep money. I think this is a sympathy move because MTN has moved so much, and so sometimes if one stock rallies significantly,
Mm-hmm.
it tends to pull the others behind it, right? Because again, remember markets are mostly psychological, right? So you
Yeah.
watch MTN running so much. What's the first thought that comes to mind? Telecoms are running, right?
Yeah.
So you look for the legged ones, the one that haven't run as much. So
Okay. Okay.
if you go to Vodacom, so obvious competitors is Vodacom, Telcom. So we only have Vodacom, Telcom, and Cell C. And Cell C is under Blue Label, so then they're having troubles with their own. So no need for to look to them. So you're looking at Vodacom and Telcom, right? When you're looking
Mm-hmm.
at Vodacom, Telcom had its own rally. You're looking at Vodacom is lagging behind the market, right? So you take some of the shine from MTN, you go dump it into Vodacom. So you lock in some of the profit from MTN because it has ran so much. It's 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 somehow causing a skew in your portfolio. So you'll be
Right. Right.
picking up
Okay.
Vodacom in hopes that it will catch up to MTN.
Mm.
You see, that's kind of the play here. But I don't. That's not how I trade. I'm just alluding to the psychology of the market. That could be one
Good
of the
stuff.
reasons um, behind a subsequent rally, if at all it does come.
Mm-hmm.
Right, Woolies is not looking very nicely, and to close it off, I look at Citrix 40 and I look at the lazy system. Came close to stopping me out yesterday. In fact, it did look like it was stopping me out yesterday at points in the day, but came back to close right back above the 30-day exponential moving average. Um, so yeah, even if it comes back above 15, I will ignore it because my stop loss is still below the 30-day. But if from the breakout above 70 on my small account, I will take up a position. So once
Okay.
I'm done looking at my stocks, I look at the index just for amusement purposes. What's that 50-day? Look at the index, and I can see that we're looking very nicely. I look at the rand, how the rand is looking. So we're
Mm-hmm.
breaking low on the rand. So the rand is gaining some strength, which is not good for some of the companies that I'm looking at. So I just take note of that. Then I'm aware that the market is as a group will have a tough time rallying because of a weaker rand.
Mm-hmm.
Because half of our companies have offshore exposure. Half of the profits from the top 40 come offshore. So if the rand is strong, that means those profits are coming in smaller chunks,
Okay.
right?
Okay.
I don't look at the US anymore, but I will look at platinum. This is a platinum chart looking very nicely, which explains why platinum is starting to run. Because look at that, look at that, nice and clean. You look at silver. Silver is looking okayish. And then I'm going to look at Bitcoin a little bit, not looking very nicely. And then I'm going to look at gold. See, this is the gold breakout that I was telling you about. And it looks like
Mm-hmm.
it's a very strong breakout. They're going to look at the prices of oil. Oil is looking good, which explains the move in Sasso. So this is the
Oh,
price
okay.
of Brent and the price of Western Texas. So yeah, and that's pretty much it. So I know that at the open, I'm all, excuse me, I'm only buying African Rainbow Capital,
Mm-hmm.
and of course I would update this. I would update it with the summary right here. It does give me a sense of where we are in a nice clean format, and also subscribers how we're looking like. All right, and that's pretty much it, man. Any questions?
No, all good, all good.
You see how I.
So are you planning to with Capitec? Are you planning to buy that? Like
Pardon?
if it breaks out, are you planning to buy Capitec if it breaks out?
Yeah, if it breaks out, I buy it.
Okay.
So I'm gonna jump into Capitec in a moment, and yeah. So I would then tweet something or tweet this and send this to my mailing list. But yeah, so let's look at Capitec quickly before we close down. Right. So if we close through 21.74, I raise my stop loss and add to the position. I'm looking to add to my position. It's been a tough hold because man, those drawdowns were quite deep. So now from now on, I'll be more cognizant of this trend line. I will be more wary. Ndizoyijonga kakuhle that trend line. So yeah, that's it for today. If you have questions, you can quickly up them. Otherwise, you can park it here. So this is how I build my relationship with the markets in terms of being one with the market and reading the market and getting the read and the feel of the market. Is because I do this every day. Today it took me about an hour and a bit. It roughly takes 2 hours a day, and it's this part of the process that makes the returns, because it's not me actually buying the stock. It's me looking for the stock that matters the most, because
Yeah.
if you can't catch a lucky shot if you're not at the crease, man. So you have to be at the crease at all times to look for these opportunities. So you have to be in the battlefield to you have to be in the woods to catch a dairy, man.
Yeah. I feel
Yeah.
you.
So yeah, man. I hope you learned something. I hope this was valuable to you. And thank you again for joining today. We'll do this again tomorrow.
Yeah, no, definitely.
Yeah, I will put the video up on YouTube. I put the video up on YouTube, so if you want to watch it back, you can go back to watch it. It'll be up later in the day because now it's time to get ready for the day.